What's going on, everybody, and welcome to bootcamp day number 4. Today we are going to be going over levels of interest and how to identify them. And then throughout these next few days, I'm going to be showing you each way that you can identify these levels of interest. But real quick, before we hop into it, make sure you guys are doing your daily check-ins. Scroll down to that comment section and let me know that you guys are still rocking with me. Again, 31 days of brand new videos for you guys. So if you haven't already, make sure to subscribe to the channel. Make sure you have that bell notification on so you do get notified every single time these videos go up. But yeah, let's hop right into it. Alrighty, so levels of interest. There is many different ways that you can identify a level of interest. Some of them being support and resistance, some of them being Fibonacci, supply and demand, or you could just use indicators, VWAP, moving averages, Bollinger Bands, Keltner channels. And there's just so many different ways that you can identify levels of interest. That's why throughout these next few days, I'm going to be showing you each way that I identify levels of interest. I want to keep today's video relatively short. It is Friday, and I can guarantee most of you guys don't want to be sitting here for 20 minutes watching a YouTube video on your Friday evening. So I do want to discuss 2 trades that I ended up taking today using levels of interest, plus the 2 previous videos that we had on price action, volume, and I believe it was piecing together the price action, volume, and candlestick. So now we're just going a step further and we are including the levels of interest. So one of the trades today, this was the second trade that I ended up taking, well, technically third trade, but so on the SPX today, I realized that SPX was coming down to a whole psychological level of 4,500. Again, we are going to be discussing this throughout these next few days, but this was just basic support at 4,500. Now, as price starts flushing to the downside, as you guys saw in yesterday's video and the video before that on today's Friday, so on Wednesday, as we can see, the price action confirmed the level of interest because look at the wick and look at the level of interest. 4,500, very nice lower wick, and SPX doesn't have volume. So if we head on over to SPY and we look at that exact candle, head on over here, look at the volume on this 5-minute candle on SPY as SPX hit the level of interest at 4,500. Look at the volume, look at the lower wick. What does that tell us? Buyers are present, we have a level of interest, and the price action confirms. You don't need any indicators to tell you that this is a good entry. So we ended up getting long inside a Team Bull, and we actually caught a very nice move to the upside off this trade right here. But again, having that level of interest plus the price action plus the volume confirms for a high probability trade. So that was one of the trades that I ended up taking today. The other trade that ran 170% today on Apple. So if we pull up my daily watch list, I do go live here on this YouTube channel every single morning at 8 a.m. Eastern time and give you guys this watch list for completely free. You guys watch me draw my levels and everything. But on this watch list, I put Apple very interested in a bounce at 184.85 all the way down to 184.15. So we have our levels of interest. The reason being these were 2 Fibonacci levels. As you can see, 61.8% retracement, 50% retracement. And if you are looking to learn more about my overall day trading and swing trading strategy, how I find bounces, rejects, support and resistance, price targets, Fibonacci, all the indicators I use, and so much more, make sure to check out my 450-page book on Amazon titled The New Age of Technical Analysis. Tons of amazing reviews. Definitely make sure you guys check out the reviews. But if you are interested in learning more about my strategy, make sure to check out my book, The New Age of Technical Analysis, on Amazon. The link will be down in the description. So in the SPY trade, I was using a basic support level off of SPX. In this Apple trade, I am using Fibonacci. Again, there's many different ways that you can identify a level of interest. So looking at this Apple, again, 184.85, and then this 184.15. We can see in the pre-market that there was a lot of support at this 185. So now if we pull up Apple, and again, 184.15 was the lower one right there. If we pull up Apple, I literally got long the very first minute of market open. So as we can see, my bounce level was down here at this 184.15 level, and price dipped below the level. Now, what I want you guys to keep in mind, and again, we're going to see this throughout many examples going into these next few days, we're not always going to hit a level to the exact T. Sometimes we're going to break below it. Sometimes we're going to bounce just short, or if you're looking for a reject, we might reject just short, or it might overshoot it a little bit and then start rejecting. So I had my level of interest on Apple at 184.15. Price dropped to the downside and actually dropped all the way down to a low of 183.25, which was 90 cents below the level. But here's the thing. The buyers entered the market and they drove prices right back up to the upside very quick and very strong. And as a result, we ended up getting long with our stop loss right below this low. And as Apple pushed to the upside, obviously locking in the profits on the way up, the contracts ran to a high of 170% all the way up here. So again, looking at this 1 minute candle, yes, the first opening candle is going to have higher volume, but piece together this wick plus the level of interest plus that volume. What do we have? Price action, level of interest, volume, confirmation, get long, stop loss right below the lows. And since I have the 21 EMA on this chart, we can just go ahead and throw that on as well. Again, there's so many different ways that you can identify levels of interest. But if you like to use the 21 EMA, for example, and actually I'll show you Amazon because I didn't take this Amazon trade, but it actually looked really, really good. And I thought about it. I just didn't take it, and then of course Amazon exploded to the upside. But as we see later in the day, Apple comes up, rejects the level of interest, 21 EMA, rejects it here, and if you like to use that as your level of interest and you have a game plan seeing something like this, you could have gotten short with a stop loss right above these highs. As you see over here, maybe you could have done it here, maybe you could have done it here. Obviously, it didn't drop too much, and then it came back up. So again, that's why having a plan and having a proven profitable strategy around your level of interest is going to be very important. So from there, Apple ended up dropping to the downside. The trade that I did not take on Amazon, there was actually a 5-minute squeeze, which I believe there is a class about the squeeze, but pretty much when there's a squeeze, a 21 EMA is going to be very important. So as we can see on Amazon a little later in the day, it broke above and then it came down and it had a nice wick right off of that 21 EMA and it reclaimed it with a bullish candlestick. The very next candlestick, what did it do? Came right back down to the 21 EMA, had a nice lower wick, bullish candlestick to the upside. Volume elevated, letting us know buyers were present, level of interest, and look at that wick. So again, what do we have? Price action confirming, level of interest, volume behind it, high probability setup. And as we can see, Amazon climbed all the way up to a high of 143.6 before then pulling to the downside. Let's just go ahead and make this an 8 EMA real quick. So boom, now we have the 8 EMA on the 5-minute time frame a little later, as you can see on this one right here. Again, if you have a plan around using the 8 EMA and that's how you identify levels of interest, because I really like to use the 8 EMA and 21 EMA to identify entries as well. So as we see, as price pushes up and it comes back down and it retests the 8 EMA, what does it do? Same exact thing, low volume retest, nice bullish lower wick right here. Price then comes back up, giving an entry stop loss right below here, or actually below the 21 EMA because the 21 EMA wasn't too far. And then sure enough, there went Amazon. We ended up taking a swing on AI earlier in the week, and we actually got a very good entry right off of the daily 8 EMA. So we added a little earlier in the day, and then as price came down towards the 8 EMA was actually a little lower. As we know, moving averages are going to move throughout the day and as more price action comes into play. But I told everybody to watch the 40 mark for an add to the position because that is where the daily 8 EMA was for this swing. So we ended up getting an earlier entry somewhere up here as it started to break above a 4-hour bull flag. But then as it came down towards 80, that is when we added to the position and these contracts literally exploded. This thing climbed all the way up to a high of 44.93 before pulling back. It was a beautiful trade. So this is why having levels of interest is going to be very important, because we don't simply want to buy just because we get a bullish hammer at some random spot in the price action, or we don't want to go short just because we get a gravestone doji in the middle of nowhere. Like, yeah, sometimes we can do that, but a majority of the time, I don't want to do that. If we come down to an area of support, whether it be, Fibonacci, support, demand, an 8 EMA, 21 EMA, whatever, if it is an area of interest and I'm going to be looking to use that as support, then I want to see bullish price action off of that level. Bullish hammer, dragonfly doji, bullish engulfing, etc. So if that happens at a level of interest, that then increases the probability of a trade. Again, if it happens in the middle of nowhere, I don't necessarily care about that setup. I always want to take trades at my level of interest. If price is coming up to resistance, whether it be supply, normal resistance, another Fibonacci level, 8 EMA, 21 EMA, whatever it may be, and we start seeing bearish price action, bearish hammer, gravestone doji, bearish engulfing, etc., then that's what confirms a trade. So when you piece together price action, level of interest, and volume, that is what sets up for a high probability trade. So again, throughout these next few days, I'm going to be showing you guys multiple different ways that you can identify your levels of interest. I'm going to be showing you 3 different ways, and it's going to be an in-depth breakdown on each of them. So if you need to, make sure you guys go back and watch day number 2 and day number 3 of this boot camp, because that is going to be very important when piecing it together with these levels of interest. And other than that, everybody enjoy your Friday evening. And if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And get ready for boot camp day number 5. I'm super excited for you guys to see that video. Everybody have an amazing rest of your day, and I'll see you guys tomorrow.